Ladies and gentlemen, it's the one and only Jay Stein coming at you with a final post-market recap of a crazy day that wasn't supposed to be so crazy, but it was crazy, and I feel a little crazy, but hopefully by the end of this video, we'll all feel crazy together. So anybody that knows me, which is pretty much nobody because nobody watches this channel except for a handful. I'm starting to see some people, which, by the way, can you subscribe? You know, it makes me feel better, you know, just being, you know, it feels good. I can tell my therapist about it. Positive stuff. Anyway, so major first off, like I said, most people who know me know I don't really care about the indexes and, you know, the non-farm payroll, you know, whatever. I don't care. Well, it's not that I don't care. It's just that I don't feel it's as important as they make it out to be. But this retail number came really shy. And if you've been paying any bit of attention, you know this. I know this. We all freaking know this. In fact, I knew this back in Christmas. You know, I could tell. You go to the malls, everything. I mean, whatever. My Christmas tree was not exactly filled. You know what I'm saying? So, anyways, so despite the fact that they're coming out with the stimulus, and I had mentioned this morning, that, okay, it will be offset by the amount of stimulus. No. That actual retail number loss, the stimulus going, if all of it, 100% of the stimulus, you know, everybody's stimulus check goes back in retail, is not even going to come close to make up for what they lost during the last quarter, what have you. So, although I do believe, like last time, stimulus checks are going to be spent on dumb stuff like flat screen TVs and, you know, stereo systems for cars and guns that people don't need and all kinds of other stupid stuff. Anyways, so I did notice the 10 years started creeping back up again, but not really that important right this very second, because the Federal Reserve is coming out tomorrow. Now, Jerome Powell, they have their meeting today, and then he comes out tomorrow, and then he answers a bunch of scripted questions, and he's just such a soft hand. He's got soft hands. You can see it. And I don't know, something about men with soft hands bothers me. But anyway, so he's going to come out, and the market's going to... Here's the deal. If he comes out and says that they're going to continue asset purchasing, which I talked about this morning, okay, that they are going to, let's see here, make no major differences in rates, nothing like that, that they're going to keep inflation where it's at, and that the market's good. You see, he's going to answer it just like that. He's going to look down, like I'm looking down at my notes, and he's going to read pretty much exactly what I just read to you, except for in political talk, which is a bunch of BS that's meant to make you bored. And yeah, no, I say it direct, I think, and I think it still makes more sense. Leave it in the comment. Maybe I don't. Not the point. So he's going to come out and he's going to say that they're going to buy up all the assets, CMBS, the CMBS, all the other companies and the corporate bonds and all the other things that need to be propped up because they're derivatives of, you know, shit that could blow up the economy. All right. So he comes out and says all that. The market loves it because that means that they're just going to keep printing money, free money to the banks, and lend it out, fractional reserve lending, and the whole, you know, it's basically, not only would the Federal Reserve crank up the music, they're going to double the amount of chairs that are in there. I mean, you're not going to lose if you're one of these big banks. Now, if he comes out and says something wild, like, I don't know, we're concerned about inflation, if he says something like that, we're going to have a problem, because as soon as that freaking 10-year bond starts cresting that 1.7 mark, then 1.8, 1.9, 2, we're going to have some major problems, as in, like, major problems. And as I had mentioned before, you know, I'm not really into the whole, you know, index this, index that, but the import index, price index, has gone up, which means despite the valuation that we use to evaluate our currency, the USD, it doesn't matter because the rest of the world is not caring as much. So our cost is going up despite the fact that it's being misrepresented through the Dixie or the DYX. Anyways, I want to talk about a pharmaceutical topic, but it got me a guideline. So all I can say is that the United States, we are lucky, and we were able to put an order in for 500,000 AstraZeneca, which is the best vaccine out there. AstraZeneca vaccine is the best, and we ordered 500,000 for us in the United States. We're lucky. I want my arm jabbed as quick as freaking possible. You know what I mean? I am all for it. Dude, I don't want to strike for that because that was nothing but positive. Anyways, there's an energy company, Gritty Energy. They're actually based out of Playa Vista, California, but they're getting sued because they were part of the reason why half of the power grid went down here in freaking Texas, where I happen to be from. And yes, it was cold and it sucked. But anyways, they're getting sued. That's kind of funny, in my opinion. They deserve it. And the fact that they live in freaking Silicon Valley, I think that's pretty crappy of them. And in a little while, I'm going to do another video on the two stocks that I'm looking at getting into tomorrow, because they're very, very interesting, and I think that they're worth looking into. But this video has gone on long enough. Much love, everybody. Thank you for tuning in if you did today. And again, please subscribe. It really would make me feel better. It would make my day. Anyways, much love, everybody. Have a good evening. Talk to y'all later.